Let's take a look at two calendars to kick off the discussion for this week. One is the economic calendar, two is the earnings calendar. I'll dive a lot more into these and the implications, but let's talk about where we are in terms of today. We got the JOLTS data, really not much to be said about the 10 a.m. reaction to that today. Tomorrow, we've got the ADP and the advanced GDP numbers. Yes, they're going to be pretty important in terms of growth, especially since the R word, recession, not Raghee, has been thrown around so much. Remember that once upon a time, a recession was two consecutive negative GDP quarters. Now, not sure what recession is, but Jerome Powell and company have basically redefined that. The other big event is the pet inflation indicator of the Federal Reserve, and that's the PCE. The CPI, well, probably a more realistic metric of inflation. The PCE is what is built into the models at the Federal Reserve. So that tomorrow, probably a big deal, right? Especially since part of the conversation about macroeconomic, forget tariff, forget earnings, but macroeconomic implications for ongoing rate cuts. Yes, gang, we are still very much in a rate cut environment. 60+% expectation for a cut in June. And that then rolls out to a 52% probability of a second cut in July. The data this week, JOLTS, the PCE, yes, the GDP, and most definitely the non-farm payroll are going to be a big part of what will keep these columns moving towards rate cut probabilities or moving away. There has been, nor is there any expectation for a rate cut in May. So if anyone says, but they're not going to cut in May, they never were. That was not really ever a high probability. Let me take you back on over to this recap, because this is what I send Sector Secrets Mastery members. And today, as we wrap up the day, we have open positions and profitable positions in Kroger and in Walmart, closed a swing trade out in Disney. And now the idea is to wait on whether it's Visa, Meta, Microsoft, MasterCard, Lilly, you name it. Why these names? These are not the only names that are reporting this week, but they are the ones that are largely, heavily, right, weighted in sectors and in the indices. So when it comes to Visa and MasterCard, those are top 6 weightings within the XLF. Obviously, Meta, Microsoft, Apple, Amazon, those are 4 of the Mag 7s. Chevron and Exxon, that is basically, for all intents and purposes, the XLE or energy ETF. Now you notice the positions that I've got really are not going to be that sensitive to earnings. So really this is about circumnavigating so much of that data we've got coming in the earnings. That means I'm looking at things like gold miners. I'm looking at setups in the utilities. I'm looking at setups in the staples. So how can I take advantage of names that aren't necessarily tethered directly to the fortunes of the NASDAQ, the Dow, and the S&P? And this is a really good way to do it. And not for nothing, these 3 sectors are also the most strength we've seen amongst the other sectors. These are the relative performers. These are the top 3. Definitely want to keep an eye on things like Wheaton, Newmont Mining. Those are 2 of my favorites. There are some other stocks that are in uptrends that may not be as sensitive to the movement in the broader averages. One that comes to mind is DG, and this is Dollar General, looking for potentially a mean reversion on the daily time frame. Look at the uptrend. Is this one of those stocks that's heavily weighted in the S&P, NASDAQ, Dow? Not really. Heavily weighted in major high concentration weighted sectors? Again, not really. So this week is really about how do I put on positions that are not going to be sensitive to what happens in the broader averages due to those names that are reporting earnings. For the most part, DG is in the XRT, the retail ETF. This is where my attention is. Now, when we go into the premium video, I'm going to get a little bit more into the earnings, but let's touch on that right now. If you haven't yet used a earnings calendar that doesn't give you a cutesy little economic week of logos, please, please, please. I don't know these people. I did know the person who started this service a long time ago. He's since sold it. So this is just a service I pay for. And it allows me to track a lot of very cool things about earnings. I can look at a curated list of names. I can look at the list of names 1 month, 2 months, 3 months, next quarter out. So the preparation of a rally into earnings is a realistic conversation. This site is called Estimize, Estimize. I don't get anything if you use them. I pay for it just like anybody else. This is my favorite earnings site. And the reason I like it is, let's say I look at JP Morgan. This is July, right? The next earnings season. I'm going to be thinking about JP Morgan probably at the end of May, early part of June, right? That's where I start thinking about JP Morgan. Honeywell, earnings were before the bell. I'm not thinking about Honeywell today. I'm thinking about Honeywell basically 4 to 6 weeks before today. So what's 4 to 6 weeks from now? Let's say we go out to the end of May. So if I'm preparing for earnings, now is the time to think about rallies into earnings and that jockeying for position in things like Salesforce, NVIDIA, Costco. All right. Even if you want to take a look at AZO or these names, 4 weeks out, right? 4 weeks out or further. And by doing that, I can take advantage of the non-heightened implied volatility. I can take advantage of those rallies, that jockeying into position before earnings and get flat. That's the key, before earnings. In the premium video, I'm going to get into the Darvis 2.0 sandwich setup. Okay, Rog, that is a ridiculous name. Agreed, but it's kind of memorable. The idea is, with so much consolidation on the 1 hour time frames and so much data, how can we have more nimble setups in our trading? And that is by waiting for narrow sideways ranges, right? Narrow ranges, identifying them with the Darvis 2.0 and taking advantage of the expectation of follow through after a period of consolidation. So we'll be talking about that in the premium video. And I'm sure we'll be showing examples and talking about that in upcoming videos here at the Simpler Trading YouTube channel, for sure, over at Charts and Coffee. I'll see you tomorrow for Charts and Coffee, by the way, right here at the Simpler Trading YouTube channel, 9 a.m. to 9:20. In the meantime, be good to each other, and I'll see you in the next update. Hey traders, Raghee from Simpler Trading. Thank you so much for watching this video. Be sure to leave a like and a comment below. And remember, subscribe and click the bell icon so you'll get notified of the next update. And when you're ready to join me for live trading, be sure to head on over to simplertrading.com. I'll see you in the next update.